Connecticut business owners, should you elect into the Connecticut Pass-Through Entity Tax? But before we answer that question, you might want to know what the Connecticut Pass-Through Entity Tax is. You may recall that as part of Donald Trump's Tax Cuts and Jobs Act of 2017, he reduced the amount of state and local taxes you can deduct on your Schedule A of your 1040, meaning that people in high tax jurisdictions like Connecticut have to pay more in federal taxes as less of our local tax burden is deductible, increasing our taxable income. Of course, Connecticut could have lowered its tax burden, but that's not quite the style of high tax jurisdictions. So what the state did instead was to create a complicated workaround that some business owners can use to attempt to get full credit for the vast amount of state and local taxes, known by the acronym SALT for short, that Connecticut residents are forced to pay. Now, here's how it works. The pass-through entity tax taxes the entity, not the owner. So some Connecticut businesses can get a federal deduction at the business level and a credit on their Connecticut tax return for the taxes that they pay. The pass-through entity tax, or PTET for short, is a 6.99% tax on your pass-through entity's income. Again, the entity pays a tax, but you, the owner, get a credit, 87.5% of your share of that tax against your Connecticut personal income tax. Despite its complexity, the PTET was actually a good thing for many Connecticut businesses, but not all. As now I want to get into the big change you probably didn't hear about. As of January 1st, 2024, you actually have to elect into the pass-through entity tax in order to claim the credit. Otherwise, you will be stuck with a default rule that affects Schedule C filers and W-2 employees. Your state and local tax deduction may be capped by the Tax Cuts and Jobs Act, resulting in more federal taxes owed. Okay, so should you elect in or out? Well, let's go over the steps to decide. 1, are you a Connecticut resident getting hammered by the state income tax deduction cap? If so, you probably want to elect in. If not, there's really no point. 2, do you have a non-resident business owner? Maybe, because here's the thing, if their home state allows the credits, and this could require some real analysis to determine. 3, are there any partners or owners of the pass-through entity that's a corporation? Well, you got to skip it for them because they're not entitled to take the credit. 4, can you handle the quarterly payments and paperwork? If you elect in and your tax liability is over $1,000, you are now required to pay estimated Connecticut taxes every quarter. But our advice before you elect in, be sure you model it out. So grab your CPA or reach out to us at IRSMedic.com if you don't have anyone helping you, and run the numbers and see which way works best. And here, when it's really critical, when you have non-Connecticut residents as business owners, as again, those credits may not be available for them to use on their state return. And one final point. By the time you're watching this video, the due date to make an election for your 2024 return is March 15, 2025. But if you did file an extension for your business, you still have time to make this election. But feel free to reach out to us if you already filed, but would like to get it right for next year. So the bottom line is this: the Connecticut Pass-Through Entity Tax election, use it right, your federal taxes go down. Use it wrong, and it's just another headache. Now, you want more tax tips? Yep, hit that subscribe button, drop your questions below, and go to irsmedic.com/prep if you are interested in getting help from my firm. I'm Anthony Parent. Let me know if you like this, and let me know if you want to deep dives into how other states have implemented workarounds to the SALT deduction cap of the Tax Cuts and Jobs Act. And one more thing, this is only available for people with pass-through entities. So if you are filing a Schedule C, this is not something you can elect into. You may want to file and convert into an S-Corp for this and potentially other reasons.